If you're measuring Bitcoin from a piece of paper, it will appear it's going faster than everything else. And it'll be volatile on the way there on both things I just said. If you're not in Bitcoin at all, not measuring it from a piece of paper, then you're going to be debased. All of your assets, everything that is going to be debased, and your life is going to get harder and harder and harder. I am in Bitcoin, and what I see is my house keeps falling in value. Energy prices keep falling in value. Every price keeps falling, and if you're measuring Bitcoin in a piece of paper, it'll appear like it's going up faster with volatility than your other assets.
Jeff Booth argues that Bitcoin offers a way out of this system. Unlike fiat currencies, Bitcoin cannot be debased or manipulated by central authorities. Its fixed supply of 21 million coins ensures that over time, its purchasing power increases rather than decreases. Those who have held Bitcoin for extended periods have consistently seen their wealth grow, reinforcing its role as a superior store of value. He explains that the transition to Bitcoin is not theoretical or hypothetical. It is already happening. Bitcoin has been around for 16 years, and historical data shows that its return on investment far outpaces traditional assets. Even if someone buys Bitcoin at the peak of a cycle, the lowest internal rate of return, IRR, over a 4-year period has been 23%. This reality imposes a new discipline on financial markets as people realize that holding fiat-based assets means losing value relative to Bitcoin.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
This is a hard thing to understand because most people measure their world from the system of debasing currency. And so let's imagine a city, let's use the city of Vancouver. For their citizens, what they don't know is they're paying these taxes to the city, and the city parks them in the money that's losing money. And by the time they spend their taxes on services, those services cost more to be able to provide, and the city can't provide those services. And then the citizens wonder what's going on. And what's going on is you can't deliver the services because the money's being debased. And so the citizens are getting poorer and poorer and getting worse, madder and madder at the city. And there is no fix from a system that's debasing currency. But if you put some in Bitcoin, then that cannot be debased. So that you can, in other words, in the future, you can buy more services for your citizens. And as you start to understand this, and you start to understand this is not maybe true and it'll happen one day, it is happening. And it's been happening for 16 years. And you can see anybody who's in Bitcoin and stays in Bitcoin, they can purchase more.
Yeah.
Their money goes further, and that'll happen forever. It makes sense that more people would see that and move their time to the thing that can't be debased. So every asset is contingent on that debt being solvent. Not just the 36 trillion, the personal debt, all of the global debt being solvent. And it's insolvent. And it cannot allow the free market to work because it has to manipulate money more and more. So all of these things, you can expect inflation to get a lot higher because the only way to reset that debt is through massive inflation. In other words, debasement of currency. And you can expect that a whole bunch of people fighting in their assets within that are trying to trade assets. If you said 11%, the IRR of Bitcoin is 45% a year. If you take if you bought at the top of any cycle and held it for 4 years, your lowest IRR is 23%. What does that mean if you're making 11%? It means you're losing that money to Bitcoin. So you can just, every single person starting to realize that this is imposing a new discipline on the world, whether they care about it or not. It would make sense that people will move their time to the highest kind of risk-free asset, because if you hold in self-custody, it's completely risk-free. It has no counterparty risks to the other system. It's an energy-backed system. And so they're moving their time, and it would obviously make sense that governments will move their energy to it as well. If you're measuring in Bitcoin, then it's the first global free market. All prices will fall forever.
Right.
If you're measuring Bitcoin from a piece of paper, it will appear it's going faster than everything else. And it'll be volatile on the way there on both things I just said. If you're not in Bitcoin at all, not measuring it from a piece of paper, then you're going to be debased.
Right.
All of your assets, everything that is going to be debased, and your life is going to get harder and harder and harder. So it's not Bitcoin, it's our perception of what's happening. And that perception of what's happening based on what I just said is each person unique. I am in Bitcoin, and what I see is my house keeps falling in value. Yeah. Energy prices keep falling in value. Every price keeps falling in value on any longer term. If I set it on a week or a month, it might change. Any longer term value, all prices are falling as they should in a global free market. If you're measuring Bitcoin in a piece of paper, it'll appear like it's going up faster with volatility than your other assets. All of this new news and what is happening kind of trickles out across society, and then other people are trying to capitalize on different on-ramps and everything else. If the easiest thing for you to do is buy an ETF, it's a giant funnel of understanding. But when you really understand it, you'll want to self-custody it. You'll want to not, because the only way to introduce counterparty risk is to trust somebody else with your Bitcoin, right? So you have a choice in this asset class to have zero counterparty risk. You can run a node, and if you learn how to achieve zero counterparty risk, you have the only non-counterparty risk asset in the world. But you could choose to pay somebody else to hold this for you and pay a fee to introduce risk. So as you understand this more and more, you become self-sovereign, you become free, you move your time. And then now that process takes some time because we're not used to that process. We're used to trusting institutions that they will protect us. When the truth is the institution has been co-opted by the money and it's not protecting you anymore.
Booth touches on the impact of artificial intelligence, AI, and how it is being leveraged by major corporations to consolidate power. He argues that AI, when properly integrated with Bitcoin, can distribute wealth and productivity benefits more equitably. However, large corporations and governments often promote fear narratives around AI to justify increased regulation and wealth extraction. He likens this to the traditional financial system, where fear keeps people dependent on fiat currencies and centralized institutions. Bitcoin, on the other hand, removes this fear by offering a decentralized.
It's going to happen. It's still so early. Like you're talking a very small percentage of population understanding and at different levels of understanding. But it's going to happen because the other lever on this, technology is not slowing down. That means that speed up or that exponential rate of technology is driving deflation at a faster rate. That productivity is that wave. People say we can pay back the debt with higher productivity. It's an oxymoron, right? Productivity is faster deflation, meaning you need to offset it with more manipulation of money. So you have two giant waves hitting each other. A productivity wave, a global productivity wave, where we have to use the best tools, more productivity, or our business will fail, right? To somebody who uses better tools. That means a whole bunch of jobs get less, but we win because prices fall, or those jobs get destroyed, and it gets consolidated up into government to be able to print more money. So how fast is this happening? It's happening in an exponential rate, and each person's understanding of it is where they're going to play kind of that chaotic or hopeful, and it's going to be both. It gets more complicated for a lot of people because they're measuring Bitcoin from a system that's debasing. So if you measure Bitcoin, if you think Bitcoin is a decentralized, secure protocol bounded by energy, and the natural state of the free market is deflation, then the protocol bounded by energy that you couldn't change would price the free market. So all prices relative to that would fall forever. And the only caveat to what I just said is if Bitcoin became not decentralized or secure. So as long as it stayed decentralized and secure, prices would fall forever. But that is massive, important considerations, because what that means is we've never lived in a global free market, because we consider inflation normal. But productivity is deflationary. Free market is deflation because we use things that give us more value. So, but we've never lived in a system that would allow that productivity to flow to us, and a credit-based system can't allow that deflation. So the credit-based system has to get concentrated more and more. It has to keep on printing money. And most people are measuring the world by the manipulated money, that things are getting worse and worse. But if you're measuring Bitcoin, your life is getting better because all productivity is flowing to you in that. In fact, Bitcoin is perhaps the best AI investment because it forces the productivity from AI to you. Every moment that you move more time, and if you're spending 2% of your time understanding Bitcoin, spend 4%, spend 8%. Every time you spend more time, your life will get better. You will understand that you're now not being debased, and you'll move more time. So what drives the timing of this? It's us. It's all of us deciding which system we're feeding. Are we feeding the honest system, or are we feeding the dishonest system? And we'll tell ourselves in the dishonest system. We'll know for sure that the free market is deflationary, and we'll price everything else in the inflationary, trying to make enough money to be able to beat the other guy in that system. So it's not. I'd like to say there is no they. It's we.
Yeah.
Right. And so when it's when you decide. Is there any danger of AI if the prices fall to zero of AI? Probably no danger at all, right? Because we all get the benefit of AI. So why would the big AI companies be driving fear into AI? Because then you can regulate it and you can extract wealth from the fear. Same thing in the system. The fear keeps people stuck, and they feed off that fear, and they spend more time in that system, and they don't see that there's an alternative path that looks totally different. We've seen like zero fear of that, and because there are so many people that now know what I know, and they are the nodes, and they're keeping this decentralized and secure, and they're building all of the other tools that ensures that that happens. Most of the people that think that if you thought you could co-opt Bitcoin by consolidating enough Bitcoin, then you don't know Bitcoin.
Booth believes that the transition to a Bitcoin-based economy is a choice that individuals and societies must make. The existing financial system is inherently inflationary, centralized, and dependent on manipulation. Bitcoin, by contrast, is deflationary, decentralized, and free from counterparty risk. He emphasizes that people are already voting with their money by choosing which system to participate in. The more time and energy individuals allocate to understanding and adopting Bitcoin, the better their financial future will be. This transition is not driven by external forces, but by individual choices, collectively shaping the future of the global economy. Please like and subscribe.